Good morning, Paul. Georgie from Allendale. It's September 13th, Thursday morning, and we just got the USDA weekly export sales numbers. And corn export sales 427, about half of it actually coming out of 12-13, and then another half coming in the 13-14 time frame. Soybeans 628. That's within the trade estimated range, and we got wheat at 382. That's pretty much in the middle of the trade estimated range. After the report, we've seen just a penny or two bounce in the futures on the corn because of the export sales number there, which is a little higher than the trade average or trade range of estimates. So other than that, the market is kind of quiet here this morning. We've seen a very narrow trading range in corn overnight. Looking for some direction from this point on is what the grain markets and the agricultural markets in whole are looking for here in the next few days. We do have a quarterly stocks report coming up at the end of September, and then you've got the next monthly USDA report coming in October, where it's anticipated that they will make some adjustments to harvested acres. But the macro markets have got a big deal coming out here this afternoon when the FOMC meeting releases its minutes at 11:30 Central Time today, and then at 1:15, Chairman Bernanke will speak, answer questions about the economy, and it's anticipated that somewhere in this in the minutes or in his conversation this afternoon, there will be some announcement of a QE3, and I would say the averages are 60% of the trade is looking for some type of an announcement. The other part of the trade expect not to see an announcement. So if he doesn't make an announcement on QE3, it could be quite negative to the market. Other news, we've got the European newspapers and headlines there are in support of the German Constitutional Court yesterday, and feel now that the European community is safe and they've got their financial situations under control. So we'll see how that works out as time progresses there. Back to some impact here on grain. The USDA again didn't change numbers a whole lot yesterday, and that was negative to the corn, where people were thinking we should see some further downgrading in yield. But I think they left that bullet basically for harvested acres adjustment here on the next month's report. We did see basis improve at the Gulf yesterday, about 3 cents, and that could be giving us an indication that harvest is winding down in the South, where there was a lot of corn that was going into the system in the South, so we didn't see a need to move grain on barges down the Mississippi. We also seen domestic users here, ethanol plants and processors, basis improved on corn and soybeans yesterday, especially in the soybeans, where the crush margins are still extremely good. Few processors are bidding up for beans, and ethanol plants are looking for corn, especially in the southern part of the Corn Belt, where harvest is extremely poor and supplies are tight. China's National Grain and Information Center commented yesterday that they're expecting only 1 million metric tons of corn to be imported into China in the 2013 timeframe. We've also got Egypt looking for and tendering for more wheat today. Another fact that we noticed here this morning, open interest increased sizably in corn yesterday, about 14,000 contracts. We've seen funds, big sellers in corn, about 12,000 contracts yesterday, and buyers of about 14,000 contracts in soybeans. So a lot of things to look at there in the grain market as we go forward into the weekend, where technical issues are going to be extremely important. Chart watchers are looking at downtrends that have been broken, support areas that have been taken out, especially in corn. If we close below those levels on a weekly basis, that could trigger some further pressure in this market, so something to watch as we go into Friday's close. In the livestock trade, we had cutout values up a bit in the choice, up 18 cents. Select was up 50 cents. We're finally getting and seeing some a bit of strength in the choice cattle. Or in the select beef, which might be giving us an indication that feedlots are willing to put a little more of this lesser priced corn into these cattle in order to get them to choice condition, because we've seen choice product drop sharply in the last week compared to our select drop sharply compared to choice, which is giving us an indication that maybe the tide is turning there, especially with a little weaker corn prices and a little more incentive as choice cattle supplies are extremely tight. Pork cutout values were down $1.70 yesterday. We're seeing a lot of spreading going on there. We're seeing some liquidation in the deferred contracts of hogs as cheaper corn prices support the nearby contract a bit, and also give traders ideas that we will have more hogs available, especially if feed costs trend lower. So stay in touch with Allendale Advisory Service, and we'll keep you informed the best we can. You can reach us at any time at 800-262-7538. We also be happy to email you any answers to questions. You can reach us at research at allendaleinc.com. You can get all that information right on our website as well. So we wish everybody a very successful trading day, and I'll talk to you tomorrow morning.